Hello and welcome everyone to another episode of the Market Outlook series with me, Kavita Agrawal, the founder of EXP-Invest. We are here today to talk about. Oh, just hold on. I think I missed a little step in my setup today. The banner. There you go. So, again, welcome back to another episode of the Market Outlook series with me, Kavita Agrawal, the founder of EXP-Invest. We are here today to talk about Nifty's fresh rally. Today we saw almost 500 points upside in a single day. Was this unexpected? Not at all. Because if you look at the market commentary, which I share in my Telegram channel, this sharp upside was already talked about as back as Tuesday. Yesterday, the market took a bit of a preparation, giving confusing signals. But today, from the point of opening to the point of closing, market gave a one directional rally. Let's get into the charts of Nifty and let's decode this rally to see whether this Nifty rally is here to stay or are we in for another bumpy ride like the one that we've seen in the last 2 months. So like every week, we'll start with the 3-minute time frame of Nifty. Now on this 3-minute time frame, what we see is, by the way, this week you're going to see some tiny tweaks in the EMAs on my charts. I'm going to tell you about those as we get to it. So what you'll see here, this gray line is a 2500 EMA, which basically is 500 multiplied by 5. Basically, what we're looking at is the 500 EMA of the 15-minute time frame shadowed on the 3-minute time frame. Here, this has acted as a very good support because the price kind of took support, the price kind of weaved around it a few times before it went up. And here, there was also strong positive divergence on the 3-minute time frame. A positive divergence followed by a strong positive range shift. What do I mean by positive range shift? I mean that even though the price was declining or price was lower than the previous low, the RSI was well settled above the level of 40. This is a positive range shift. That means that the momentum had already shifted before the price had shifted, right? So these positive negative divergences that we observe in the market are nothing but the moments where the range for the momentum indicator has shifted. And if you think about it, these range shifts are very intuitive because RSI is an oscillator. It is bounded by two levels. So when the market is very bullish, it's got to oscillate in the bull range. When it's very bearish, it oscillates in the bear range. And for different stocks, for different indices, any market, any commodity, any currency pair, if you can identify what this bull range versus bear range is, it can make your trading journey a lot profitable. So looking at the 3-minute time frame again, what I can see here is that 22,250 had been acting as important resistance for a very long time. And the last week's session, if you go and see, I had said that, a lot of insights, the 3-minute time frame lately has been very rich in terms of the insights that it is adding to our analysis, right? So here again, we saw the first positive divergence right here, after which we saw a rally to the resistance. Then that rally kind of fizzled out in a very slow, very painful manner. Why do I call it a slow and painful manner? Because there were two major consolidations within this, right? It's always better when the correction happens in a straight, in a proper fall rather than this choppy movement, because it constantly gives a lot of fake signals, and that is what makes swing trading very painful a lot of times. But it is also very rewarding if you undertake proper risk management. So here, what we can see now is that the 3-minute time frame is looking super bullish, which is a first indication for us that this rally is set to continue. Now, also, if you look at the volume, right, the volume has picked up quite a bit in the last half of today's activity. Going to the 15-minute time frame, let's set this chart, reset this chart. What I can see on the 15-minute time frame also is the bull range is very evident here as well. Why? Because apart from a few times, the RSI is now sustaining above the level of 30 a lot often than it was doing so before. So the RSI is kind of shy of coming below the level of 40, if I may say. Here there was a very small breach, insignificant, small breach, insignificant, small breach, insignificant, right? And now the RSI is again crossed above the level of 60, which means that the underlying bull trend is still intact. Taking a look at the 75-minute time frame. Now, if you have seen the past few sessions, the 75-minute time frame is the one that has been giving us a little bit of, discomfort. Why? Because the RSI here is nowhere close to the massive high that it was touching previously. It's been quite low. Also, the volume activity was very diminished on this last. Let me stretch my charts a little bit. If you see this last leg of upside, the volume activity here had been quite diminished. So we were a little skeptical about what was going to happen. But once this correction happened, and this blue line, which is by the way new, this blue line is, if you see, this is the 100 EMA. 100 EMA on 75-minute time frame is actually the 20 EMA of the daily time frame. Right? So the 20 EMA of the daily time frame is what has been overshadowed or shadow. I call this shadow plotting. It has been shadow plotted on the 75-minute time frame. And this shows us that the 20 EMA has lent support to Nifty repeatedly as it has been trying to, deal with this extended period of choppiness. So if you actually look at the prices, ever since we created this high, right? Ever since we created this high at the level of 22,100, the market has been very unforgiving and very choppy. There's not been a proper trend in the market since pretty much 15th of December, which, is quite a long time. Let's reset this chart. So this is a very good trend to swing trade in. But when the choppy markets come, swing trading becomes less rewarding and more painful. But now what I can see is that we've given a bit of a breakout. 22,250 was an important resistance and we've broken out of it. However, the 75-minute time frame continues to remain subdued. So what I want to see is I want to see some strong momentum happening here. So how is the RSI giving confusing signals on the 75-minute time frame even as of now with this 500-point rally that we've already seen? This RSI, as long as it stays below this level, right, it is not very bullish. But since it is also not breaching the level of 40, it is also not bearish. So this is the textbook definition of a choppy or a confusing market, right? So we want more bullishness to come into the market. The next resistance for Nifty as a matter of fact, is 22,500, right? Going to the daily time frame, the daily time frame had some bit of negative divergence occurring, and we can see that even now, with this resistance of 22,500 being taken out, it does look like another strong day of activity can be seen. Now, it is very important that the market sustains 22,250 as a support and does not close again below that, because during choppiness, if you look at the past, we have seen a lot of these strong upside movements, but they've not really been able to sustain. There's been a lot of up and then down, up and then down, up and then down, up and then down. That makes trading and setting stop losses really hard, because you have to set stop loss. There's no two ways about it. But the problem is that your stop loss keeps getting triggered, which increases your post-trade analysis a lot. So it just increases the volume of work. It crushes, the market tries to crush you under the volume of work that it generates for you, right? Now, one more thing that I want to absolutely comment upon today is the wave count. So if you look at this chart, I would say this is where a new rally kind of began in the index. So I want to go back on the 75-minute time frame, and I want to do a bit of a wave counting and see where we stand today, right? So if I just zoom into this, what I would say is this was the beginning of the new rally, right? And up to this point, this was clearly the first wave, and then this was a bit of a correction that we experienced, and then here started the third wave. So after the third wave, because this second wave was so small, I believe this has been the ABC correction, and now a fifth wave has started from this point onwards, right? And this first wave has just been over. Now, if I can also break this down into like 5 waves, that was a very rough breakdown. If I have to do it a little bit more properly, I would say this is what it looks like. And then this wave also can be broken down into 5 waves. And I believe there is more upside to come. So my target for the rally is around 23,200. I am not very certain of that target. I was very certain when I gave out the target of 22,200 back in, I think that was in October that I gave that target out. I don't remember very clearly, but 22,200 I was very certain of. 23,200 is achievable, but I would not give it a very high probability ranking because of this intense choppiness which has been happening. And if a big negative global news comes in and topples the market, then there is a pretty good chance that this fifth wave is going to end up becoming a truncated fifth wave. These are concepts of the Elliott wave theory that I'm touching upon here. Now let's clean up the chart again. So very bearishness signals. Sorry, 75-minute is giving us not very bullish, not very bearish signals. The daily time frame is giving a RSI negative divergence, which is a little bit concerning for us. Oh, why did my internet get disconnected? Okay, I'm back live. That was odd. Let's just confirm if we are live again. I believe we are live again. Okay, so let's move on to the Bank Nifty chart with that. Now, as the Bank Nifty chart loads, I also want to show you my Telegram channel. And like I said, this rally had been talked about on the market commentary, which I'd shared for Tuesday. Let's see if I can find it. Yeah, there you go. So on Tuesday, the activity was still sideways, but there was subtle shifts which were noted on the 3-minute time frame. And I had suggested to my members of the Telegram channel that their capital or their trading corpus should be as close to 100%, as close as possible to 100% engaged in swing trading, because a strong rally was expected and risk management is key. So 22,500, I do expect the market to test the level of 22,500, but then again, I don't expect it to hover at that level for a very, very long time, right? Having said that, let's start with the analysis of the 3-minute time frame. And what I see here is this 46,700 has been important resistance, and it has now been broken above, and we are headed for the next resistance at the level of 47,850. And the Bank Nifty is actually looking quite good. It's looking way more bullish than the Nifty is, and both on the 15-minute and the 75-minute time frame. So I think this correction has played out pretty well, and banking stocks are already pretty attractive, but probably the best time to enter them is a little behind you. The best time to enter the banking stocks was this range, when the Bank Nifty was below the 20 EMA on the daily time frame, and between the 20 and the 100 EMA on the daily time frame, right? Now it's kind of heading it's more closer to the resistance than to the support. If you look at the daily time frame also, I think a nice healthy correction has unfolded here, and we can expect upside. On that note, if we look at the Nifty again, I think what I'm looking at here is not a negative divergence, but a very strong bullish range, a very strong bullish trend in which basically the RSI kind of came down and sustained way above the level of 40, and now is ready for another leg of upside, because that is very common. So I would expect something like this, at least one more strong leg of upside to unfold in Nifty before a major correction happens. So I've been getting a lot of people coming to me and saying that, hey, this source is saying that Nifty is expected to correct. That source is saying that Nifty is expected to correct. I think, sure, man, correction in the market is inevitable, but keeping your cash uninvested because someone said it's going to happen without proper strategy is a really, really bad idea. So I think you need to keep your cash invested, but manage the risk that it's being exposed to. And I'm not talking about options or hedging. I'm just talking about using stop losses and trailing stop losses, right? So if again, going back to my Telegram channel, after every session, I like to post these useful links which can help you in a lot. If you click on this link, my service offer document will open for you, in which swing trading service recommendations, swing trading training, weekly classes, and portfolio management services links are made available. So all you need to do is join my Telegram channel and open this services offered PDF. How do you join my Telegram channel? Search Trade with Kavita on the search tab. So go to your Telegram channel and just type in Trade with Kavita. Now remember, when you type Trade with Kavita, you're going to see a lot of channels because there are lots of fake channels and fraudsters running similar stuff with my name. But make sure that you join the correct channel. It'll have around 4,720 followers. Join that and engage with the quizzes that are being posted and participate in the live webinars that are being posted. Now, one more pointer before I get into the discussion of the intersector analysis. I'm sure a lot of you have stock queries that you would like to discuss with me. So the easiest way of doing that would be to open this link that I'm giving you, exp-invest.in/stock request. So I'm going to drop this link along with my Telegram channel in the comment. So what you can do is open this link and yeah, so stock request. What is going on with you today? There you go. Now here on this link, what you can do is you can fill out this form and let me know what stock queries you have, enter the cost price, enter the ticker name, enter what is your query, and then I will respond to your query in this session. All right, so let's close this and let's get back to our chart and let's open the indices layout. Now on this layout, we will look at a comparative analysis of the sectoral movements to assign a certain which are the sectors which is leading and which is the sector which is losing. So while this loads, we have Tejas with us. He's asking, what is your best strategy for swing trade? So Tejas, for swing trading, I like to use momentum and volume analysis. So for momentum analysis, I look at RSI. For volume analysis, I use volume plotted using MACD, and I compare 20-day average volume to the 100-day average volume. I am not a very big fan of using chart patterns because remember, whatever is common knowledge no longer has an edge. So you cannot profit from that kind of knowledge. And I also like to, and this is something that I have discovered over the last 12 years of practice in the stock market. I like to ascertain each stock's decision-making time frame and stock personality and combine those to make prudent decisions in the market. So what that does is it takes away the sting of corrections and dips. It helps me stay very, very objective because now I'm no longer asking myself, what if I buy the stock and it goes down? Now, using the decision-making time frame enables me to look at the stock in the sense that, hey, now it has come to a window which is very good for buying, so let's buy it. I no longer care about how the broader market is doing. I'm just looking at strong fundamental stocks and waiting for them to become technically, come to the right time to purchase. And I teach all of this in my advanced technical analysis training program. So if you're interested in learning swing trading from scratch from me using my screeners, my dashboards, my Excel sheets, Google Sheets, my way of looking at the chart, setting up the chart, everything will be taught to you in that. All right, so Aisha, let's answer your question. Which sector is good for investing for the short term? So I want to look at the market activity from the 22nd of February because that is where intermittent low was formed in the market. And what I can see is in between, since the 22nd of February, am I saying the date right? Let's just quickly go back and see. Okay, so this was the reason why there is a big kink in the market. Actually, let's take a look at which are the sector. Let's also go one time frame lower on this. Let's go to the 15 and let's look at the market from yesterday because, you know, yesterday we created a low and we've rallied. So clearly, okay. So the metal sector, I've been talking about a potential rally building up in the metal sector for the last 2-3 weeks now. And today the metal sector has really emerged at the top. And I think this rally in the metal sector is going to continue. I think it's metal sector was already engaged in a strong bull trend, and then it went into consolidation when a lot of euphoria got built up and retail traders started coming and buying metal sectors. And now that so much correction has happened and people have lost patience, now the metal sector has started to rally again, and I expect this rally is going to continue. Let's take a closer look at CNX PSU sector, PSU bank sector. So CNX PS. Why is my internet so slow? Come on. Okay, you're gonna experience a little bit of yeah. Internet can be. So I've got like 2-3 alternatives going for my internet given the history of issues that we've experienced in the lives. All right, so this should be better. Oh, this rally is unrelenting. Unrelenting. So, okay. So this is definitely the beginning of a fresh upside in PSU banks. And I think this rally does look pretty set to continue. So PSU banks look quite attractive. The PSE sector is also looking quite good. However, some stocks, some specific picks in the PSE sector can be a little dodgy. So be careful of them. Commodity sector, bank nifty, private sector, energy sector is also looking quite good. Auto sector is also looking quite good. So see, most of the sectors right now, honestly, are looking really attractive, including the healthcare and the pharma and the IT, which are also at the bottom. Because what I think is that this is the beginning of a fresh upside in the market, and this rally is expected to continue. So make sure that you're investing in stocks where the risk reward ratio is very attractive and worthy of your capital, rather than just going for small bets with, big bets with small returns and big risk profiles. Right. So having determined that, the overall market looks pretty attractive, even the FMCG sector has been looking quite good. I think a strong rally is going to start there as well. The market has been kind of baking for the last 2-3 weeks, I would say, and now it's ready to start rallying again. Now, with that note, I really want to start looking at your stock queries and start helping you out. So let's go back to our stock query requests and look at the responses which have been filled in. So I can see that nobody from this session has filled in the response yet. So I would really appreciate if you went into the stock request session sheet that I've already sent you and fill in your requests. So since nobody from the current session has filled in anything yet, let's look at what we have from the previous sessions, right? I need to zoom out of this a little bit. All right, so we have Varun, and Varun has bought Cosmo first. Bought it in 22 for long term, but since last year it's been going down, can still hold for long term, but would love to know the reason for the stock going down. Varun, I don't know why Cosmo First is going down. It's not part of my watch list, so I'm really sorry, but I cannot help you. I will, however, look at the technical chart and I will see if there is Cosmo First, if there is any potential stop loss that I can recommend for you. So looking at the weekly time frame, oh, this is a very interesting stock, and evidently it's also very cyclical, and that was not very good. It's also very cyclical in the sense that it likes to give momentum moves. And I do think that it's, it's kind of fallen quite a bit, and it's not very unusual for the stock to fall 50-60%, but then after that it kind of begins to rally quite a lot. So I am expecting this stock to be close to the beginning of a fresh rally, if you can see from here, right? I do expect this stock. So before I say it's attractive for the long term, I would also like to take a look at its fundamental. But assuming that the fundamentals of the stock is good, I think once it comes between this 500 and 200 EMA zone, this is actually the 1000 EMA, 200 EMA of the weekly time frame, right? Once it comes in between this zone is when it'll become really attractive. So between the zone of 440 to 338, that is where someone can potentially add more to their position and continue to hold the stock for the long term. For Varun Bansal, let's take a look at Renuka. He's bought it at 48. Now Renuka, I'm sure Varun, 48. So you've bought the stock after the rally. I know sugar stock has been in the news quite a bit, but remember, sugar stocks are super cyclicals, okay? So because you've purchased after the rally, you've probably not made a very good entry. What I would recommend to you is to exit the stock right now, because the sugar landscape is a little, it's got mixed news, good and bad. But if you, for some reason, have some conviction, then I would suggest you maintain a stop loss at the level of 43.2, okay? So Renuka, we've analyzed today, and the stop loss recommended at 43.2. right? And the spot is 46.45. Here, if Renuka tends to go up, which I don't really have any reason to believe, because the strong rally actually, it has been kind of diminishing the volume. The loss of momentum has been pretty evident on the daily and the 75-minute time frame. And if you see here, right, the volume pickup has been more on the downside than on the upsides. So I do expect some selling to come into the stock sometime soon. But if this low doesn't get breached, then I would expect that this stock can maybe retest the level of 66.6, right? So with that, let's come back to Anuj and let's see. All right, so we have one request from this session from Swananda. Hedge. Holding since IPO, next target to book profit. So IRIDA, let's quickly take a look at Indian Renewable Energy. So you're holding the stock since IPO, and I think you should definitely keep holding the stock. It looks very attractive, and I think this is probably market cap wise a little bit on the smaller side. I mean, not really. It has a big enough market cap also. But yeah, I do think that it looks pretty attractive, and I do expect the rally to continue to continue. So I would suggest that you continue to hold the stock for now. Do maintain, I mean, honestly, a stock that moves like this, it's very hard to give a stop loss. But yes, the stock is attractive for the long term. You can continue to hold on. So Ananda, I hope that was useful. If you're here and you've seen this analysis, do leave a kind comment and like this live stream. Let's move on to the next stock. Data, I don't know what this stock is. So let's enter the date and let's take a look at data. I think it's data patterns. I'm not sure. Yeah, data patterns in there. Okay. So very strong rally unfolding. Let's reset this chart, and 75 is a bit of a small time frame to analyze it on. The daily makes more sense. Very strong rally and expected to continue on all time frame. Looks very attractive. Volume participation absolutely top notch. Keep holding, no reason to sell whatsoever. You might, however, want to maintain a stop loss here because a low has been established, 2370, price is 2662. So maintain the stop loss, and target is really hard, but if I have to absolutely give you a target, I would suggest this trend line here at the level of around 34.50. Moving on, let's move on to the next stock for Kavita Agrawal. Marksons 146 is the cost price. Okay. So, like I said, I am expecting the rally in the pharma sector to continue, and Marksons is a very good candidate to explain why. Like I said, there's a decision-making time frame and a stock personality. So Marksons, I would say, is a super trender as per my own categorization of stock personalities. And I think that between its super trend, which has been unfolding since the 23rd of June, it has taken a small correction, and another upside can be expected here. However, it can be a little hard for the stock to go past 190 because that is the trend line where it has been taking resistance multiple times in the past. But if 190 does get breached, then the level of 300 can also be expected. So the intermittent target for Marksons would be 190 for you, Kavita Agrawal. Now, for Kanjan, let's take a look at Credit Act. And okay, so Swananda Hedge has submitted another stock. Very smart of you. AMI Organics, 1100. I think is one of the most undervalued ones. So inquiry to make new entry. Okay, let's take a look at AMI Organics. Let's take a look at the profile of the stock. It's pharma major, health tech, and if we look at the market cap, not a very big company. Okay, it's I think it's a mid cap company, so fine. The daily time frame looks very, very attractive. It has created a consolidation zone and is also giving a positive divergence, taking good support of the 500 EMA. And the 75-minute time frame has already moved to the RSI bull range, which suggests that the bullish momentum is expected to set in, right? So when a stock goes from bear range to bull range, that is an early on sign that a bullish momentum is expected to set on. And the stock actually does a pretty good job of signaling this in advance, as we can see in the past price activity as well. So I would expect at least, if not more, this rally to get mimicked again. So you can maintain a stop loss at the level of around 1014 and go ahead with this position. Your initial target would be 1460 on this stock. So I will also set an alert so I can look at the stock's activity for the next few days. All right. So someone is asking, can I join Gap Up for your intraday BNF calls? So first of all, I don't give any intraday calls. Second of all, I don't give any Nifty Bank Nifty calls. I only give updates because I want everyone who's part of my community to have a general direction of the market, because it's very important to know the general direction of the market. But I don't trade in, or I don't recommend trades in any kind of leverage or margin trades or intraday. I only help people with swing trading because there the risk is more realistically manageable, whereas in options and intraday, there's just too much noise and the competitive landscape is tilted way against you. Yeah. All right. So with that, we've come to the end of this live session. Thank you so much for joining in. I hope I was able to add some value to you. If you like this stream, don't forget to give it a thumbs up before you leave. And please join my Telegram channel if you wish to connect with me further. So this week onwards, the Monday session is being converted to a Trade Together program members only Q&A Connect, which will be conducted on Sundays. It'll be a Google Meet. So I will see you again in the next live session, which will be scheduled on Wednesday at 5 p.m. So every Wednesday and every Friday, I'll be doing a public and open live session. And for all the members of the Trade Together program, there will be a special session every Sunday at 1 p.m. to 1:40